one major point that as an investor I have to take is that nothing is absolute. Everything has to be taken over the longer duration of the time, right? Because we have to see the cycles. The cycles keep moving forward, backward, sometimes up and down. And each of us as an investor, we keep hearing this long term, long term, long term. Why long term? Because I genuinely want a tablet right now who can cure me, who can make me financially independent. Why should I worry about long term, and what actually it means to be a long term? And if you can illustrate us saying that how long term actually creates this massive impact on my wealth.
See, why every advisor, every mutual fund person, or any financial advisor will keep telling you long term, right?
Yeah.
See, markets will move unexpectedly. Some war will happen, some other problem will happen, some election will happen. All kinds of random things will keep happening in the world, right? So the markets will be random in the next 1 to 3 years. The reason we always tell investors to have a long time horizon is because markets are going to fall at unexpected times. You don't want to be forced to sell your investments at the wrong time. So if you're going to put money in equities, then over two things, only put that money which you don't need in the next 1 to 3 years. And be willing to wait for 5, 7, 10, 15 years. The reason is the market, as I told you, you should not be. So for example, let's take an example. You invested in 2018, for example, right? And then 2020 happened. And then you have to, you have to pay off some loan or whatever XYZ happens. And then you have to forcibly sell your equity investments in March 2020. What will happen? If you versus you did nothing, you knew nothing about stocks, nothing about mutual funds, you had absolutely no idea, but you just waited for 2 years.
Yeah.
And you sold your investments in March 2022. The difference was almost, I think, 3x.
Yeah.
Right, from the bottom to say March 22.
It was, yes.
Right. So that is why we say long term, right? And it's a simple arithmetic of compound interest. I think everybody should actually do this calculation by their own hands in an Excel sheet. If you don't know how to do an Excel sheet, please learn. Because some things in life you have to do it yourselves to understand the power.
Yes.
Just compound your money at 10% for the next 20 years and do it at 15%, do it at 20%. And just see how much that 1 rupee becomes. Right? When you do it yourself, you'll realize how compound interest works.
Yeah. No, definitely. I think now it is clearer to my head also that why we should let the compounding do its magic, basically what we all tell. And as you rightly said, the typical equity market or the markets in general go with ups and downs. And we have seen that especially in the stock market, we have seen those returns going ups and downs, but at the same time giving 3x, 4x kind of returns also to the investors, which ultimately have turned their lives around. Because somebody would have made actually life-changing money in that, so that they can actually go back to that dream of financial retirement.